Welcome to Smart Stock Watch. Today is May 21st, 2025, and we're diving into Lowe's Q1 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Lowe's performance and their strategic direction.
Let's get started with an overview of Lowe's and their latest earnings report.
Lowe's is a leading home improvement retailer, and in their Q1 2025 report, they announced a diluted EPS of $2.92, slightly above the forecasted $2.88. Despite a decrease in comparable sales, they have affirmed their full-year outlook.
Revenue and profitability overview. Let's start with the top line. Lowe's reported net sales of $20.9 billion for Q1 2025, a slight decrease from last year. John, can you elaborate on this?
Absolutely. The decrease in sales, down from $21.4 billion last year, was primarily due to unfavorable weather conditions early in the quarter. However, they saw growth in pro and online sales, which helped offset some of the decline.
And what about their profitability?
Despite the sales dip, Lowe's managed to achieve a net earnings of $1.6 billion with a diluted EPS of $2.92. This is a slight decline from last year's $3.06, but it still beat the analyst forecast of $2.88.
Operational efficiencies and future outlook. John, how is Lowe's managing its operations, and what does their future outlook look like?
Lowe's is focusing on operational efficiencies, maintaining an operating margin of 11.92%. They are investing in technology and store environments, which has led to them being ranked number 1 in customer satisfaction by J.D. Power. Looking ahead, they expect total sales for the year to be between $83.5 and $84.5 billion.
That's impressive. How are they planning to achieve these targets?
They are committed to strategic investments and disciplined capital allocation, with $2.5 billion earmarked for capital expenditures. This includes enhancing their digital capabilities and improving store experiences.
Capital allocation and shareholder value. Let's talk about capital allocation. How is Lowe's ensuring value for its shareholders?
Lowe's is committed to generating sustainable shareholder value. This quarter, they paid $645 million in dividends and repurchased $112 million worth of shares. Their strong cash flow from operations, totaling $3.379 billion, supports these initiatives.
It seems like they have a solid strategy in place.
Indeed, their disciplined approach to capital allocation is designed to enhance shareholder returns while supporting their long-term growth objectives.
Key takeaways. As we wrap up, John, can you summarize Lowe's Q1 2025 performance and their investment prospects?
Certainly, Lowe's delivered a solid performance with a slight beat on EPS, despite a challenging sales environment. Their commitment to customer satisfaction and strategic investments positions them well for future growth. The affirmed full-year outlook is a positive sign for investors.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Lowe's performance in the comments below.